And we have Tim Ward on the line. Tim, how are you?
Good, good. Thanks for having me on.
Pleasure.
So, we want to look at the markets here? We can
No,
take a look at...
nope, not at all. First, I want you to tell us and tell the listeners exactly how they can reach you.
Okay, it would be, my website is ord-oracle.com. I do have a Twitter, or an X, I guess you might say, Oracle. If you do @Oracle, you'll get to that Twitter account. Other than that, Tim, or my email is tim@ord-oracle.com. So those are the places you can get me. Or you can just Google me on... You just Google Tim Ward too, I'll get you there. So
I'm sure it will. Folks, Tim's going to now give us his charts. We're looking at the daily equity put-call ratio, the S&P.
Yep. This is actually, I wanted to ask the audience too, if they have an interest in something, you can, email me or email TFNN if you want to cover a certain equity or index something, we'll take a look at it. But what we're going to cover today is the equity put call ratio readings, and it's kind of rare. This chart goes back to looks like about 2023, and it's a daily chart. SPX on the top window. The bottom window is a 21-day average of the CBOE equity put call ratio reading. Next one up is a 10-day. The next one up is a 5-day. So you got a 5, 10, and a 21-day moving average of the equity of the CBOE equity put call ratio readings. What I found when all three of those, which right now are all three of them are actually in bearish territory, you at least get sometimes you get a decent top. Sometimes they're smaller tops, but almost always you get at least this. This big one here was that top back in this year. It started in basically December, lasted until February. The market kind of just traded sideways, and all three of the equity put call ratio reading averages were all in bearish territory. So that was another reason I suspected the pullback was coming. We had another small one here. Looks like this was May, lasted, looks like probably maybe a week, and now we got kind of the same thing going on here. We got three of the moving averages. This is a sentiment indicator, so it in other words, the public is too bullish on the market right now, and when you get to 21-day average, which is basically a month of equity put call ratio readings in bearish territory, you got to really kind of look out. And so we're in that range right now. So even though we're kind of staying steady here to the upside, the sentiment wise is bearish. We'll look at another one here. Here's the bottom window is the VIX. I do quite a bit of work with the VIX, or actually this is the bottom window is the SPX VIX ratio, which flips the VIX upside down. So it's just a little bit easier to read. So, but when you got the S&P's making higher highs, which it has over the last week and a half, you got the equity, or you got the SPX VIX ratio making lower highs, and that's that can go on for a while. Back in the top of actually earlier this year, we kind of had the same thing. The equity market was kind of pushing higher, and that ratio is pushing lower. We have the same thing on a little bit shorter term scale, but I think we're at the tops right now. Will the market start to decline? Today, not necessarily. Sometimes the tops take a little bit longer. So we're kind of looking for a trigger to actually go short, but it's not a big short. We'll do one other indicator here. The bottom window is the SPX. This is the daily. The next one up is
so this is chart number 3, right?
Yeah, just chart number 3.
Good. Okay.
Am I running the charts?
SPX/TLT, right, as well. Right.
Yeah.
Got it.
All right. Am I running the charts, or are you?
No. Al's running the charts, but I just wanted to check that we're looking at the right chart. That's good.
Okay, all right. And the next window up is SPX tilt ratio. So that's the equity market against the bond market. And normally when you move too far in one direction on this ratio, SPX to tilt ratio, either you get a bottom or you get a top. So I put an RSI with it. And a lot of times, right here, you got the RSI way below 30. That picked out, that shows where that went. So that picked out that low right there. And you had an RSI again on the downside, which picked out that low. So, picked out this low right here is the minor low. Picked out the major low of April, which is down here. So now you got some tops going on. You got the RSI, way up above 70 here. And you had it, this is last, I think it was last, did I write it down? No, I didn't. I think it was last Thursday, the RSI got up above 70. And now it's turned down. If you can see it right here, this ratio is starting to turn down. Even though the equity market is still holding up here, this SPX tilt ratio kind of leads the way. So this is another chart. So how deep are we going to the downside? Not much. So this is the monthly SPY, the SPY on a monthly chart. And if you notice back in here, and this is February, that was the high. We test that February high on about half the volume. Or actually, no, this is a February high, and now we closed above the February high, so it's a breakout to the upside. Volume was about double what it was in February, so it's a valid breakout to the upside. So the previous high now becomes support. So when the support comes in, this is probably around 610 area, 60. It depends how you draw your trend line, but it's around the 610 area, so it's not a big decline. So even though we're hitting a high in the S&Ps here, probably volume chart, we got about another week and a day or so of trading for the month's end. I doubt this volume will be higher than that. So we're kind of breaking above this high. This month's high is breaking above the previous high on a little bit lighter volume, so that says upside energy is kind of weakening here. But we're not going to go down far. 610 area, 608, they'll try to scare you. But probably what we're going to do is build a sideways market. Oops, I hear the music.
Okay, yep, there's the music. So, folks, the Dow's up 188. S&P's up just about 10 points right now. We're on with Tim Ord. We're discussing the charts and just how he's looking at the market and what technical tools he uses. Just fabulous information. And we'll be right back. Basil Chapman sitting in for Tommy O'Brien in the Tom O'Brien Show. See you in a few moments. Hi folks, we're back. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. And of course, this is Tuesday, and we've got Tim Ord Oracle himself right here. Tim, you're on. What chart would you like to look at next?
All right, we're still on this, this
the monthly SPY VIX?
Yeah, SPY.
Good.
And the whole point of this thing, we're at some sort of a short-term high here, but the high is not real. It's going to flip sideways. I got a bigger target up around 740, but between now and probably, I think we'll trade sideways for October before this thing takes off to the upside again. So if we're trading, you're only looking at 3%, 4%, maybe to the downside at best, and so it's going to be a dull trading period, more or less, over the next couple of months, is my view. So that's that. Let's go to the gold market. Even though I've got quite a few calls, actually, over the last couple of days. Everybody's thinking we're going to go much higher, and don't think so. This is the June close on the monthly chart. The RSI hit 7130, and I marked all the times that previously that has happened, going back to 1988, and even this one kind of just stalled the rally. It did go up a little bit more, but in general, we're probably going to just trade sideways here. I think there's a good chance we're going to pull back down to 575, which is basically the previous highs, before we go back up. But the monthly chart suggests we're going to stall in here. This is this is the RSI on the XAU, and it has a pretty good high probability. And here's another chart. I think, this is a daily. Yeah, this is a daily chart. On June 5th, a little over a month ago, we had the RSI hit 96, or we had the bullish percent index. I should read bullish percent index hit 96.43. Anything above 95 has stalled the market also. And this chart goes back to 2006, and I marked those up here, and so that's another reason. Totally a different indicator, has nothing to do with the RSI, and it's saying the same thing. And I got there was another chart too, I didn't put it in, but we should stall around here on GDX and the XAU. That doesn't mean gold stocks won't keep going up. The big ones will probably consolidate because the XAU RSI hit there and GDX RSI hit there, and probably the big gold stocks will consolidate. But on a bigger time frame, if you look at the this chart goes back to 2000. This is gold, monthly gold, and gold has an 8-year cycle, actually a 16-year cycle and an 8-year cycle. And we're kind of extended up here. Here's, if you notice this RSI up here, way up. Well, we've been way up there on gold too. Yes. So gold may consolidate. We had a heck of an impulse wave to the upside. What I want to point out is the eight-year cycle bottom in late 2023, pretty much right on target where it should. And so where's the next high go? Where the high goes, there's a 4-year cycle low, and there's a 4-year cycle high. And I marked this period right here where a bigger consolidation may happen to the upside. And I think what's going to happen, we may consolidate a little bit here, but the next important high is probably mid 2027. So
great.
It's a long ways off. Actually, I even think it could be something bigger than that, because I think what we're happening here, we're in a big 12-year cycle. This market rallied for 12 years to the upside, and I think we're in a similar cycle here. So even though we'll see some multi-month corrections, like some of these right here, I think we may have a multi-month, which are bullish. You got to have an impulse wave, then you got to have a corrective wave to build energy for the next rally. But August 2027. Has an area, which is this line right here, and previous times, which is this line here, have marked pretty much significant highs. So I'm thinking we're going to go to that time frame, and that time frame is nothing to worry about short term, but that's an area I'll be watching as we approach it. So we'll see how that works out. But we're in a major bull market. There's no top of any consequence other than we got a timeout here in an uptrend that may see a pullback on GDX. We think possibly around 40 range, which is decent. SIM is pretty high on the gold issues right now, so we're due for a consolidation. But a lot of these smaller stocks, which I got a lot of, are really starting to break out to the upside. So we'll see how it goes. Actually, we got 3 minutes here. You got something we can talk about, or do we have?
Well, I just wanted to mention, just for the audience, because this is fantastic information that you've given us. Back in September of 2011, the GDX hit. This is the gold miners index, hit 66.98 before plunging down to 1240 in 2016. Then went sideways, retested at 16.18, and then had this huge move up. So yes, and the XAU. You were talking about the XAU, and that's also very interesting because the XAU had a high, I believe, I'm just going to go to it right now, XAU.X, there it is. And that was also much higher. So when you're talking about these instruments, it's fantastic. This was December of 2010, hit 232.72 before going down to I think the 40s or something. And here it is. So this is fabulous information. And yes, I know that folks in the den and on YouTube, Tiger folks have been mentioning some of the stocks that you've had. Very low price stocks have done fabulously. So I advise everyone take an opportunity, go to the Oracle, check out these news. I believe you put your results on the newsletter as well every year. So that's great.
Yeah, I do. So, but here's the XU. I keep talking about this 2000 low here. I think we're in a similar period, and I think we're going to move up something similar to this. And I think, even though this 2016 low, I don't know. I think the part of the big rallies really have started on. If you do the analysis on a monthly chart, the really big rally started in 2023. I think this is the time that. Well, we'll see, but this rally's not over. I'll put it that way. I'll have indicators that start flashing on the monthly time frames that this rally is getting late in the stage, and at the moment we're not even near that. So it could be still a fun ride, but the next couple of months may not, because we may consolidate. So we'll see how that works out.
It's interesting in this time frame that we've got gold and silver, just these metals doing so well, because you would think that it would indicate some kind of inflationary, something like that, but it seems to be something completely separate, as if they've built up their own orbit, their own momentum independently of the market, would you say? Yeah.
Actually, I think that the equity, the gold stock to gold ratio is so low that it's starting to correct to the upside. So that's what I'm thinking. This ratio got way out of whack.
Very good point. Yes.
So.
Tim, thank you very much. Always fascinating, always terrific information for the listeners to TFNN. We appreciate it a lot. Have a great, what is it, today, Tuesday? Have a great time. We'll see you on Thursday again.
All right. We'll see you on Thursday. Thanks a lot.
Thank you very much.